MyStockScanner Live, your daily edge in the market. We simplify the chaos and run today's stocks through the 3-point playbook with our tools that talks about quality, upside, and timing. The 3-point playbook portfolio sits at 0. It might even be a little pink 0. Hans-Henrik, we sold 4 stocks yesterday. We sold 4 on Friday. Are we leaving the market or what's going on? Or you need your sound on?
All right, for one sake. It's not like we purposely are deciding we don't want to be in the market, but we have a stop loss level for all stocks, and when they get hit, we sell. We wrote to our members yesterday that it might be that the market just bounced sometimes yesterday, which it did, but we would rather be out and not take a 30% dive in the market than we would miss a bit of the upside.
And the thing is that you are strict about the rules in that sense that there's these moving averages, and once they get hit and if the gap is too big, you just leave.
It's quite religious almost. It's when we test, and we have a lot of back test and a lot of live experience, and if we start to meddle with the rules because we feel like it, then we can basically just trash our entire back test, because then we are not trading according to the rules. So it can be mentally challenging once in a while, but that's the name of the game.
See, now he's talking religion, Liam. As a tech guy, you don't believe in religion. That's how it is, because you can't do that and then be a tech guy.
Well, that's going to be divide the crowd, isn't it? I was more focusing on the mentally challenging bit, working with you two, but carry on.
I will. You were looking at Hewlett Packard's numbers, and it's nice and refreshing to see one of those trademarks companies of the tech industry going way back, delivering stellar numbers yesterday.
They did. They had a really good set of reports, and we'll look at them a little bit later in the show. But yeah, I think the CEO had a big smile on his face, definitely, after last year at least.
Yeah, last year was a hole in the ground, but there was a reason for it, and we'll talk about it in the show today. Once again, welcome to MyStockScanner Live. In a market full of opinions, we stick to our system, as you can hear. Quality companies, real upside, and then the right timing. Today, we'll look at the macro question that everybody's asking after yesterday. Was this the U-turn that's going to keep up? Is oil now at $90? And will it hold right there? Or are we on the road to a taco stand that's hosted by Trump? We will talk about it here on the show. We'll give you a Tuesday poll where you get your say about the oil prices. What do you think it will be in 3 weeks' time? And in the Danish market, we see a rebound from Zealand, and we also see good numbers from Rockwell Investors today. There's a reason for that. And Liam is here. That means that it's Tech Tuesday. We look at rising memory prices. It seems like we do that every week. You heard about it, Hewlett Packard's stronger outlook. We're going to talk about that. And then with the memory, SanDisk is, of course, up again after 11.5% jump rally yesterday. Today's number is also tech related. I'll tell you that right from the start. It's 46,500. What relates to, you'll get to see later in the show. But Hans-Henrik, let's start with this one. This is the perfect U, and we saw that yesterday, not only in the market, but also in the oil prices. What happened?
Yeah, what happened? That's a good question. The markets shot up more than we had expected, actually, from when the futures market started out. Let's see if we can get there it was. And it went up to almost $120, which is collapse point. That is, if it had stayed 120, the economies would just have went into almost an instant recession worldwide. And then G7, the largest 7 nations, Japan, UK, France, US, Canada, and so on, they came out and said that they would put 300-400 million barrels of oil from their strategic reserves on the market. That cooled the market down a lot. And then our good old uncle Donald Trump came out saying later on the evening that they had basically won the war now.
Well, talking about apparently our uncle, I was a bit surprised to hear that.
Yeah.
But talking about
it was our drunk uncle.
The thing is that he's known for this. Trump always chickens out a taco. And here I serve one for you Liam, not because you look the most hungry of the three of us. I'll put my hand up and say I do. But Liam, is it a taco on the horizon with Trump sort of seeing the market tanking and then, oh, I better get out of that war?
I think there's an aspect to that. We talked about it sort of before, and there's an element that he really wants to get out of this now because he's probably in deeper than he thought. And it might be a Putin type moment where he was told we'll be in and out in 3 or 4 days, but actually whether he can get out of this now or not is a different matter. He's pretty much annoyed quite a lot of the Iranian hierarchy in there, and that's not going to get better anytime soon.
And also, it's 17 nations involved in the war now. Lots of them didn't ask for it, but they're part of it. So,
and they're threatening, the Kuwait, Qatar, and all the UAE sort of nations are threatening to actually take off $2 trillion worth of investments into the US and promises into the US. So that's a damaging thing for him as well that he would like to get out of. But how he does that now and actually manage to get some tankers out of the Straits of Hormuz is anyone's guess.
Yeah, and he has to play golf as well. It's horrendous what he has to take.
If I may add, I had a flashback to 2003 yesterday when George W. Bush was saying that they had won in Iraq, and then, well, small detail, they stayed there 8 years more. So that is what I fear. That they're kind of tied in the country.
But let's get back to the investable side of it, because Hans-Henrik, I want to arrest you on the oil prices a little bit more, because right now that's what it's all about. It sits at around $90. That both goes for the crude and the Brent, which US and UK priced. The thing is that sustainable? Are we going to go higher, or are we going to drop back to the nice $50, $60 that we were at?
I will almost guarantee, it's hard, of course, to guarantee anything in this market, but I think times of $50 to $60 are a bit far out in the future. Remember, it's only a few weeks since we had 60, 65, and at that point, $90 were a nightmare point for us. That was a 50% increase in prices, and people were talking, if we are seeing 80 to 90, we are talking recession and so on. That is where we are at now, and after yesterday, we are almost relieved that, it's only at 90. If nothing is resolved, and when Trump said yesterday that they basically won, I kind of feel that nothing is resolved. So if this goes on and market starts to realize it was just something he said, then I think we will see, well, I said above 90 when we had our Danish show just half an hour ago. It is there now. I could see somewhere between 90 and 100 over the next week or two if boats are not starting to get through the Hormuz.
And we're going to talk something investable in relation to this, because it's other products that come out of that strait down there and that will have an influence on the world market prices in other regions. We have a play for you in a minute, but I want to sort of go on to Liam on the Tuesday poll, because the Tuesday poll, which is going to be put into our various social media groups on Facebook after the show here, and that's going to be about oil prices. We have given it a 3 weeks time span. That means April 1st. And this is not April Fool's, Liam, but I'm going to ask you, what is the price going to be in 3 weeks' time on oil?
It's an easy one. It's $117.353 per barrel. It's very, very exact. I've thought long and hard about it, and that was the number I came up with.
What was the number?
Please don't ask me again, because I can't remember. 117.353, I believe it was.
And now you'll have to note it down, because now we will hear you about it in 3 weeks' time.
The question is, absolutely no one knows. It will peak. I'm with Hans-Henrik on this one. It is going to go up, and it will come back down again. How quickly is down to Trump and Taco, and how many Shaheeds, the drones that the Iranians have actually got to throw at ships, because they're going to have to guarantee security through the Straits, and that's going to be painful.
I just saw an interview with the head of Aramco, the Arabian. He said this is the worst disruption he had seen in his 45 years career. And he said $50 to $60 is not anywhere in the near future, no matter what.
The thing is that we always ask the wisest people that we know, and there's people watching our show because they're wise enough to watch the show, then they're wise enough to know things like this. And we're going to put it into the various members group and Action Snack and Stock Chat for everyone. That's what we do, and ask you, what do you think about the oil prices?
But there's no point. I've already told you what they're going to be.
Yeah, that's the point. That's why we asked somebody else.
You can't remember.
Why we asked somebody else. That's exactly the point. But listen, can you even remember what we asked last week? Taking into consideration what happened since last week, we were talking shipping stocks at that point, especially tankers. And Axisnack said Torm were their favorite by 30%. Stock Chat for everyone said Maersk, even though they're not technically a tanker. But members said Frontline, and I'm not even going to go into the prices on those stocks right now, but they have really had a seesaw last couple of days here. And Hans-Henrik, I promised that we would bring up something investable that was related to oil coming out of the Strait of Hormuz, but not oil. And we did that with fertilizer, and I forgot the other thing from yesterday, but you have a new play for us.
Yes, and that is I was researching what is coming out through Hormuz, and we know oil and gas, and also fertilizer, as you said, where we had Yara and CF Industries and Mosaic and the different companies that produce the fertilizer. However, helium is also a really big thing. 35% of all helium is coming out from Qatar. And people might think, oh, that is balloons at the country fair and it is funny voices and stuff. But it's actually a really important commodity when you produce chips like TAIWAN semiconductors. And Taiwan only have 1 to 2 weeks worth of helium on the shelves, so they will start being lack of that very, very soon. If they run out of helium, I don't think they will, but if they run out of helium, they basically can't produce chips. We found a company that is in Europe that is producing quite a lot of helium. It's not a massive part of their revenue stream. It's 3-4%, but it is a good quality company. It's Air Liquide AI is the ticker, and it has nothing to do with AI. Quality score 87, earnings per share going up, revenue stagnated a bit. Reasonable PEG ratio, a good rising return on their capital. Good stable free cash flow, and actually a reasonable upside, I would say, from a rock solid company. Right now, the price has dipped, and we would like to see it above 200-day moving average. We can also see the MTI indicator down here is in double red, but it is something that you can have an eye on if you want to take a bit of a play on the helium part.
I've actually done some research, and they're no longer, TSM are no longer leaving it on the shelf, like you said. So they're actually putting it in a bottle, so it doesn't disappear now.
I think that was dad joke number 1 for the day. But since you
I'll have to cut that out in the recording. It is giving me so much extra.
Liam, we in the Danish show we looked at a British version of this as well. It was a small company in Britain as well. But I know that you have a take also in that sense that what is, I'm sorry to say, playable stocks or optional stocks in this situation.
Yeah, I mean, I've got a number of stocks on the tech side of things that could actually be affected by this. But the helium side of things, the big thing with TSM is that they've spent an awful lot of money on recovery procedures of getting helium back out, because they use it a lot in actual packaging the chips as well as just running the ASML machines that they actually produce the chips on. So it's used all across the board in cooling and things like that across their procedures. So they are actually dragging back a lot of this stuff. One of the Lind is the other company, which if I just share my screen very quickly, if it allows me to, done. Lind is the other one. The interesting thing with Lind, if I can find it, is it that one?
Yeah.
That's the chemical side of things. They actually have bought into the US strategic reserve of helium was privatized this year and went to, amongst others, Lind, which is quite an interesting sort of fact that I hadn't picked up before. The stock is a really, really good one, a bit like Air Liquide. Valuations, if we just reset that one, valuations look pretty good as well. And the stock hasn't dropped quite as much recently. So interesting sort of buy play on this one.
And again, that's normally the German version, and you took the American side of it, and that's fine. But it is just showing what, and I said that in the Danish show as well, is that what you two are doing on days like this as well, is that you try to look into the market and see who else can benefit from the situation like this, and try to find alternatives to the things that we all know. Talking about alternatives, this is not an alternative at all. We are going to swing by the Danish market. And Hans-Henrik, the reason we're going to do that is that Zealand finally, we had one where they were in a roller coaster as a graphic, but today we make it a little more lighter, because yesterday they ended up jumping 9% as we suggested they should, but we broadcasted at 12 and it happened like late in the afternoon. Today up as well. Bottomed out, is that it? Are we done with the bottom for Zealand?
Hard to say. We said last week that we thought it was a bit of a dramatic move, this one. It is their phase 2, and they're coming up with the phase 3. They didn't have many side effects on their phase 2, so if it's the bottom, it's impossible to say. I do like to zoom out a bit in cases like this and seeing nothing much have changed in my view of the stock.
The really interesting thing from last week, Roche is still pushing ahead with their, because they're co-authoring this drug as well, aren't they? Also, as the president said, or the CEO said last week, they, most people don't hit the highest dosage, so they're all going to be pretty much the same. This one is actually tolerated better by most people.
Yeah, and that is why I think the phase 3, where they can give them a larger dose in phase 3. So I think they will be quite equal to Eli Lilly and Novo.
Yeah, and it's just going to be fierce competition, no doubt about that. Everybody's going to give a little for sure. But I'm going to take you somewhere else before we go to our Tech Tuesday here, and that's Vestas, because they came through on a big order in Japan. And Hans-Henrik, Vestas start to look like something when you take a look in the 3-point playbook, because this was good for them.
Absolutely. Basically, I don't care about a single order. That's news. That is, as we normally say, when it's in the news, it's in the price. But it is a quality of 58 is reasonable. Earnings per share, revenue going up. Return on capital is going up. Free cash flow is going up. It's actually turning into quite a good stock here. Maybe a bit high in the valuation chart, but it has been a bit all over the place, so it's hard to say exactly where we should put it. There are some good potentials over the next couple of years here. So if they can start to show that they're not as reliant on US and the shifting ideas about green energy over there, then I think it's a good thing.
And then we need to get at it, because it is Tuesday, and he's been sitting waiting for this, because there's so much news going on in the tech industry. We even had numbers on a Monday. We normally don't get that, but Liam, we got from Hewlett-Packard, and if we started off there, what did Hewlett-Packard tell us?
They told us they had a good year, or a good quarter anyway last year. They're up sort of quite dramatically, and I think the CEO is even more pleased, because actually one of the reasons that they went up was because of the acquisition of Juniper Networks last year. So their networking division now makes up over 50% of their operating profit coming in. You can see HPE here on the screen on the playbook dashboard. You can see the quality score isn't great, and that is basically because these numbers are all over the place, and we had a very low note. They got away with not having a loss just last year. That was pretty much because there were lots of doubts over the acquisition of Juniper Networks. That was about 14.5 billion, I think, that people were saying, is that right? They also had a profit guidance issue where they actually had to lower their guidance, so they had a bit of a nightmare year last year, but that has bounced back quite dramatically coming through.
Should be noted here that they also depreciated $3 billion.
Yes.
So
yes, which no one likes to see a lot of the time. But revenues are going up in the right direction. The analysts are pretty much static on the stock. The returns is, the company's investing a lot. So we're hoping those returns and the profitability will start coming back. And you can see cash flow free cash flow is down as well because of that. But there are signs in this current sort of report that came out last night that actually the company is starting to make some decent money. So they've got around $3.5 billion a year revenue for this year in their AI side of things, and the Juniper Networks is a huge bonus, and Networks is where AI is at the moment. From a valuation point of view, we've got this big gap here because of no real earnings over the last year or so, but carrying on, is definitely plausible, but that by the end of this year, we could be 7% up and maybe 31% on a good day, and actually by the end of next year, then we could be up as much as 52%. So the stock is a really, really good one, and it's not really over trading. It's trading on PEs of 10, which is, they're a computer manufacturer. Their margins are a lot lower than anything else, but moving, they've moved recently and split their company. So there's more consultancy and there's more AI type stuff in there as well. So there's less of a, there's more reason the PE should go up rather than down, in my opinion.
And let's look at it, the timing, the last bit of our 3-point playbook.
Timing, the last couple of weeks has really just dipped below the 50-day. It's been struggling to make any headway recently after quite a big long run up there. So what we really want to see is the stock going up, just testing that 50-day and then bouncing back up, and that's when we'd be buys. And also we'd need some green MTI down here as well, just to show it's in a strong uptrend.
That was all that we had to say about Hewlett Packard. Apart from one thing, they even addressed it in their numbers. They were talking about the price of memory. And Liam, that is the big kahuna when it comes to tech at the moment. Everybody's talking memory. And yet, SanDisk went up by 11.5% yesterday. And the analytics say it can go higher.
Definitely. I feel like I've been talking about this for a long time now. I mean, we first talked about it in November. I think we picked up Micron, didn't we? But this is the story that just keeps on running. And we're not there's so much memory requirements out there. The latest thing, so SanDisk is slightly different. It's not just memory that goes into your computer. They actually make things like SSD and storage products. And what's happening is, because AI requires more and more memory, so they can do bigger AI type stuff for you, all that memory is moving into hard disks and flash drives, actually right next to the chips in the data centers. So rather than just standard memory that goes into the chips, we're also looking at plugging in these huge massive hard disks next to the chip centers as well, so that that long-term memory storage is there for the stock. The stock itself, I mean, I think they, from this quarter last year, their recent earnings, they 500% went up in their earnings, and their revenues are fantastic. So everything's going up. They haven't got much of a track record, which is why the quality score isn't great, and it's why we haven't picked them up ourselves. But everything sort of is pretty much going in the right direction when you look at this. As I say, there's just not enough information to give us that first sort of question answer on, is it a quality stock? But actually, where it's going, and they're pretty much number one in what they do, is potentially even, I mean, 300% seems like a ridiculous number to put out there, but the worst case scenario at the end of next year is, or in June next year, is around a 40% uplift, and that is actually quite a drop from the trajectory it's on at the moment. It's sort of, to me, it's somewhere between 100 and 200% that it could rise because of that massive demand in the market for it. And then from a timing point of view, it's in an uptrend. It's the MTI is daily has just turned red, but that's probably because of the shenanigans that have gone in, if you can call them that, in Iran at the moment. But we're still above the 50-day. We're above the 200. We got the weekly MTI is green, so that's great. So it's something that should it's something that would sit on someone's watch list quite happily, and it's a bit more of a punt because the quality is not there, but it's a strong stock that's not going anywhere either.
Hans-Henrik, did you hear Liam talk us way into SanDisk as a potential addition to the 3-point playbook here?
Well, Liam and I have looked at it for a long time. It's a bit like Zealand Pharma last year or the year before, where we actually were tempted, but the 3-point playbook didn't allow it. had we had a swing trading portfolio or whatever, we could easily have entered SanDisk. We were talking about, I think, the 2nd of January.
The 2nd of January, you said.
Yeah, we were talking about. So that's a bit annoying that we didn't.
It's even more annoying that you said it, but it's about 120% uplift from there. So yeah, you did a good job there. Not going.
Okay, I can feel that it's time that we move on and get to the last bit of our show, because we gave a number way up in the beginning, and that was 46,500. Not the biggest number we have here on the show, but it turns into big numbers for the company that it relates to. The company that we're talking about is TAIWAN Semiconductor. What they produce 46,500 of is wafers. And instead of me being the wise guy in the room, I'm gonna let Liam be the wise guy in the room, because this is what you know lots and lots about. Wafers, they're like should we say, chip pancakes?
Yeah, or ice cream sort of cone type stuff. Yeah, no, they're basically big discs of silicon, massive ones that go into these machines and get etched with ultraviolet light through the ASML machines, and there are a couple of other sort of producers out there, but ASML are the big guys for it. And depending on what type of chip that goes in there, that depends on how many comes out of it and what the concentration was. So when they had their earthquake last year, there was something like 30 to 40,000 chips from NVIDIA sitting in the machines that had to be thrown away, and they retail for actually I can't even remember how much they retail for. It was something like $30 to $40 million plus that they lost on that day.
Yeah, and those wafers, as we talked about them, depending on if they make large chips or small chips, it can be anywhere from 50 to 100 per wafer and up to thousands per wafer. So they really produce between 10 and 30 million chips per day.
Yeah, and the interesting fact, they are just about this year to use about 12.5% of Taiwan's electricity output just to make TSM chips.
So that's a lot.
To go into data centers that use 15% of US electricity.
That's the one. That's the one.
Yeah.
See, that's why we have an end to the show, because you guys can just go on. You just keep pitching in with stories that are relevant in regards to investment. This week, even though it's hard to believe, we still have lots of earnings coming. Oracle is one of the earnings coming later today, along with Franco-Nevada, the mining company. We have Campbell's Soup tomorrow. Thursday, we have interesting things apart from Futo. Your favorite stock, Liam and Hans-Henrik?
I'm not.
Adobe.
Adobe is coming on Thursday.
Bloody hate Adobe.
Yeah, but we're going to talk about it on Thursday when you are back on there, because Liam is back on Thursday, of course, with Thursday Tech as well. That's 1 o'clock in the afternoon. We have that, our British show, our English show for our international clients. And remember, we're back with the Danish show tomorrow at 12 o'clock noon, as always. That's today's playbook review. Keep scanning smart, stay ahead of the curve, and we'll see you back on air tomorrow in Danish at noon and Thursday 1 p.m. in English. Remember, quality, upside, and timing. Happy investing out there. Stay safe.